I want to start by thanking all of you for showing up. I mean, it's 8:22 on a Friday morning, last day of the conference, Miami, Florida. So I get it, and I understand why there are a lot of folks that are not in this room, but I appreciate you showing up and being here to absorb and get some knowledge that we're going to share with you guys today. My name is Brian Parker. I'm the Senior Vice President of Development for Wyndham Hotels and Resorts. I will be serving as your moderator for today's panel entitled Hotel Ownership, It's Teamwork Selecting the Right Partners. So I'm joined by three distinguished panelists. You have two brand representatives, and you have Kendra in the middle, who is an owner. Kendra, how many hotels do you have now?
Now three. We've had 4 in our portfolio.
Nice, nice. So before I'll have the panelists introduce themselves, we're going to do a Q&A. I want to spend the majority of this time in Q&A. So I'll have the panelists introduce themselves. I'll jumpstart the Q&A with some questions, and then I'll open it up to the floor for any questions that you may have. At the end of the day, it's all about you getting the information that you need. That's why you're here. We want to make sure that you have the opportunity to get any questions answered that you may have. So I'll start. John, if you want to introduce yourself, and then we'll work our way to your right.
Sure. John Lancaster. I'm Senior Vice President for Choice Hotels. If you don't know what Choice is, we always have this battle with third largest hotel company with Hyatt, but I believe we are by number of hotels. We're the third largest hotel company, 7,700 throughout 40 countries. And we have brands as Radisson, Comfort Inn, Quality Inn, Cambria. So I lead a team that focuses on bringing our new hotel owners in. So from an educational standpoint, making sure we handhold every single owner going through once they walk through that process.
Good morning, everyone. My name is Kendra Plummer. I'm the founder and CEO of Elise Capital, which is a hotel investment firm. So we have owned hotels with Hilton, Marriott, and IHG with about 50 million in assets under management, in which we are now owning and operating all of our assets.
Good morning, everyone. John Koshivos. I'm the Vice President and Managing Director of Development for Hilton, covering the kind of Mid-Atlantic and Southeast. My team covers all of our brands for development, conversions, new builds, except the luxury portfolio of hotels. So we don't do the Waldorfs, Conrads, et cetera. We focus on everything from Hilton on down. Been a 30-year veteran with Hilton coming up here in November, and over 40 years experience in the business, both in operations, development, and a little bit on the finance side. So great to be here. Thank you.
Nice. Thank you, guys. I'm sure many of you have heard this saying, if you want to go fast, go alone. If you want to go far, go together. That statement kind of epitomizes hotel ownership, because the only way you're going to have success in the hotel industry as an owner is if you're able to build strong relationships, and you have to be a collaborator. You have to be able to bring multiple people together from multiple disciplines within the industry to help you execute your vision. So we're going to touch on that in terms of how you go about building a team. What are the key components of a team in order for you to have success as an owner? So let's start, and I pose this question to everybody. When you think about a successful hotel ownership partnership, what does it look like? And I'll pose that question to whoever wants to start, but what does it look like? You want to start?
Sure. So for a successful hotel partnership, there's a lot of different players that come into it. So from the ownership side, you want to have strong investment partners, and whether that's a co-GP or your limited partners, those should be people that are ready to take the risk, as hotels are capital intensive. So you want to make sure that you're working with good vetted team members when it comes to owning as an investment group. On the other sides, you still have the partners of a management company and a brand, typically. So you want to make sure that your brand partner is the right fit for your hotel. And you also want to make sure your management company is the right fit for your hotel. So there are tons of different management companies out there, and they all have their own strengths. So just make sure that the management company that you are working with is a strong fit for your type of hotel. So someone who might be having a smaller select service hotel might not be having the same management company as a full service luxury hotel. So just making sure that the right partner is knowledgeable in everything that you're looking to succeed in.
Just to add a couple of points, I think, and Kendra really nails it. It's all about the partnerships when you're putting everything together. One of the key elements that I think we can all agree upon is, while I know markets and my counterparts here know markets, you always have to start off with having a really solid third-party feasibility study if it's going to be your first project, because you want somebody to challenge the knowledge that's put on paper related to how a market's going to perform or what brand might work in that market. There's hundreds of brands to choose from. We have great brands. Choice does, IHG, Hyatt, Marriott. Everybody's got great brands. You've got to find the brand that's going to work best in that particular market, and that feasibility study will help you do that. That, to me, is kind of, it's not step one, but it's definitely in the top 5 of prioritizing what you're going to look at.
I would go with a team. Everybody thinks that, starting, it's just sort of the owner and the management company and trying to find the real estate. So you have a number of people that you have to before you start on this journey. So John mentioned GCs. Kendra mentions management companies. You have to make sure you have a great brand partner. You have to make sure you have a good architect. You have to make sure you have a great attorney going over your franchise fees. You have to make sure you have a good feasibility study consulting, as John mentioned, with HVS or whoever you need to do that. You have to have partners in, and this is what a big step that a lot of people miss, is your political partners. Wherever you're building a hotel, wherever you're working, you want to make sure you get the buy-in from your local legislation, whether it's their economic development board, whether it's, if you're in Chicago, you're not doing anything without approval of that alderman in Chicago. So it's very important to make sure you do that. And also in the area that you are building, making sure you have corporate partners as well, knowing where the demand generators are, knowing that you make sure you have the wherewithal to know what's coming, what's leaving, and why you're going to stay there, and what's going to make that hotel successful.
No, thank you. So John, you'd mentioned feasibility studies. I think for the most part, as first-time hoteliers looking to getting to the business, the majority of them are probably going to acquire an existing hotel. Yep. Can you speak to the importance of a feasibility study as it pertains to new construction? But if it's an acquisition, how does a feasibility study play into an acquisition/conversion?
Sure. I think one of the things to kind of keep in mind, let's just say you're going to go buy an independent hotel. And maybe it's a brand from another company whose license is expiring. That feasibility team, you should be using them to say, what is the positioning of this asset? Where should I take the positioning of this particular asset in a market? Is there too much in the select service or mid-scale, too much in the economy or premium economy? To figure out what would be the appropriate move with the asset to make sure that you're going to be able to leverage and get a return on that purchase. You have to figure out, what's that renovation cost going to be? Do I have to hire a different style of designer to elevate the property? How much difference is that going to make in the repositioning of the asset? So when you're kind of putting all of these numbers together, there's going to be a formula that comes out to a funnel, and then you're going to be able to figure out whether or not that capital investment that you're going to have to make is going to justify switching to that particular brand. And if it doesn't, don't try to squeeze the bag full of stuff to make it work. If the numbers tell you it's not going to work, then it's not going to work. But that's where, Kendra has done this 100 times to Sunday, where they do a deep dive on something that they're going to buy. And I would probably guess more times than not, the model did not work.
Yeah, so that's also the first step. Don't put a letter of intent in without actually doing an underwriting first.
Right.
I think I've seen a lot of different people who they speak to the broker, they say, oh, this is what the bid price is, and then they just put an offer in at that price without having done an underwriting. And to John's point, You need to make sure that no one's in the hotel ownership space just for fun. We do have to have a return on investment here. So making sure that your underwriting makes sense and supports the purchase price that you're offering. So that means that you might have to adjust your pricing down, or the deal just doesn't pencil. If it doesn't pencil, don't force it, because you also want to be underwriting as an owner more conservatively. These are risky assets, so it's not always going to be the best case scenario that comes out every single time. So you need to be prepared for what could happen in each scenario.
Very good. Are you guys familiar with the term PIP, PIP, Property Improvement Plan? Everybody understands what that is? So Kendra, kind of off script based on what the conversation that we're having, how do you evaluate or assess, you have the purchase price, but at what point do you, depending on what brand you're looking at, how do you go about getting the PIP done and then evaluating the cost of that PIP in your underwriting? Can you just shed some light on what that evaluation, factoring in the PIP and the cost of the PIP on top of the purchase price to determine the value or the upside for the opportunity?
Yep. So firstly, there's a difference between your purchase price and your total cost. So your total cost is going to come from three larger buckets, which is going to be the purchase price itself, the PIP, which you normally are going to have a PIP, whether it's small or large, there normally is going to be something there. And then the third line item is going to be your closing costs as a whole. And in this area, it can grow pretty large because you need to be considering your lender origination fees, and most importantly, your brand application fees. But so for the PIP, these can range anywhere from a small 5,000 per key all the way up to now 40 to 50,000 per key. So if you're underwriting something and that PIP is coming in pretty large, which is going to be sometimes even 10, 15% of what the purchase price itself was, now your $20 million deal is going up to 30 million. And that's a different cap stack. It's a different amount that you need to raise. And it's a different amount that you need to make sure pencils at the end of the day. So in evaluating your PIP, the first thing that you want to do is, in speaking to your broker, they're usually going to give some type of guidance. And that is a good basis, but you really want to get into the particulars of it, especially in today's age where construction costs, purchasing has all gone up. So these are things that are changing consistently. So the brand is going to give you a detailed PIP. It will be a few pages of all different line items of what needs to be replaced, what needs to be taken out, and what needs to be added. From there, you can work with either an estimator who is going to give you the actual detailed budget, or if it's a larger PIP, you might want to take it to your general contractor and get full pricing bids on it. But you want to make sure that that PIP number is correct, because that will sway your deal to either be feasible or not work out.
So just in that answer right there, she touched on probably three different people that would be on your team in terms of partnership: estimator, general contractor, brand. Just in that answer on PIPs alone, those are three different areas that you have to have partnerships with in terms of building your team. So opposed to either John or both Johns, at what point in the process should someone like Kendra engage the brands? Hey, I want to become a hotel owner, identify this hotel that I think I want to purchase. At what point do they reach out to you guys or reach out to the brands to add you to their team to assess brand fit?
Well, for me, I want you to reach out as soon as you have an idea. As soon as you have what I like to call inception. Has anybody ever seen that movie? You want to make sure as soon as you have that, that one, I think I'm looking at wanting to purchase a hotel. So for us and for my team, it's very important that we meet somebody at the first steps. So you're learning, you're here right now. John, I'm here. I have $1 in a dream. Might want to have a couple more dollars before you you reach out to do that. So, understanding the process and understanding your capital stack, understanding your equity. And now you have researched what brands, you've researched what area you want to be in. You found an opportunity, and that opportunity you may have found on some of the sites, whether it's LoopNet, whether it's Crexy. And this is one thing that a lot of people don't do prior to trying to get into the business is they normally look on those sites. That's great. But you have an opportunity to reach out to brokers and even franchise development personnel to find out deals that are off market, or even driving yourself, driving to a hotel, driving to a market. You'll see a hotel and you think that, okay, this is a great hotel, but there's an opportunity for us to increase more occupancy, make the asset a little better, and go in and ask, hey, where's the owner? Would you be interested in selling? Those deals that are off market, a lot of times are a lot more lucrative than finding somewhere where actually you have, you go up, you're calling King Jeremiah and say, hey, King, I'm looking for a hotel. And you have an opportunity to find that, but knocking on those doors are great too. And those brokers know those individuals that are selling that hotel. And if you can get that, that would be great.
Anything to add, John?
Yeah, I'll just add 2 points. Yeah, call us the sooner the better, right? As soon as you have that idea, please pick up the phone and reach out to any one of us on any of these brands and start talking. The only other thing I would tell you, ask the questions of like, hey, I saw this hotel. Pick up the phone. You might call me or John or Brian, whoever, and say, what do you think of this side of the market? What do you think about this location? We might tell you, don't look there. Look over here instead. And then you can start narrowing down your search parameters. The other thing I would be careful about, and Kendra brought it up, you got to start building your team right away. One of the first questions I'm going to ask you when you say, hey, John, I'm looking at this hotel. It's located at X Cross Street, and it's got a courtyard flag on it. First question I'm going to ask you is, how much time is left on their license agreement? Because you want to make sure that you engage with an attorney right away. There's a difference between getting out of a contract by paying liquidated damages or having a right to terminate that agreement if you're going to chase after it. We all have to fight that fight. We've all done it. We've all been in it. We don't like to do it. We like you to be able to start off with a nice, clean deal. And the way to do it is to know if you're going to jump into the deep end of the pool, that you have the ability to switch the brand on a building. If it's an independent, it's not an issue, but make sure that you're talking to the people that are associated with the brand that is on that building before you make any kind of a move.
Yeah, hence attorney, right? An attorney has to be a key part of your team. Hey, Kendra, you had mentioned, and we all know, getting into the hotel business, it's very capital intensive to invest in hotel industry. That's probably the biggest barrier to entry is the amount of equity that it takes, right? You're going to need anywhere from 30 to 40% of the total project cost to invest in a hotel. So Kendra, how do you go about raising equity for your projects? What's the biggest challenge that you have in that? And what do you look for in potential investors, for someone that doesn't want to go at it by themselves, but rather invest with someone like you who has 3 hotels under their belt? What do you look for in potential investors, and how do you go about creating investor interest for some of your projects?
Yeah, so what I'm looking for in investors is liquidity. Is making sure that my investors understand that a hotel itself is an investment and it takes a longer time to receive that high return. So in your first few years of being a hotel investor, you're going to be receiving distributions or dividends. So this means that in your first few years, you are not about to be living off of, your hotel investment is not going to replace your salary. It is not going to be your big ticket out until you exit. So when we exit, for example, in my deals, we look for an internal rate of return of 18%. We're looking for an equity multiple of at least 2 times. So that means that investing with us, that you will receive a return on investment, but realizing that's over a 5-year hold period. So hotels, they are going to take some time to stabilize. They are both an operating business and a real estate asset. So with that, that means that yes, you are receiving income annually, but that operations income is going to be smaller annually. And then when you sell the entire asset as a real estate transaction, then that's your larger exit. So the first part that I'm looking for in investors is understanding. They need to be able to be having the same timeline that we do. So if you have funds, but you know that you need those funds back tomorrow, you can't invest over here. That's not how it's going to work, and that these are all long-term holds. So being on the same page, whenever we do have investments, we send out an investment memorandum. That memorandum is going to tell you everything on how we plan to take the hotel. But for everyone here, as we're always saying, every month there's been new unprecedented times, it feels like. So that means that investors have to be okay with taking a risk as well. So hotels are risky investments. There's, of course, ways to protect that risk, and ways that we do that is with, having smart management, having a good loan and not something that was taken on too high, and having the right brand partners is what adds value to our assets. But as an investor, you need to be prepared on what the timeline is and also assess your own individual risk.
Great. Any questions at this point from the audience? I mean, I can keep rapid firing questions, but I want to make sure. One right here. Yep.
Yeah, so funny enough, Hilton was one of my preferred brands when I started. And the biggest reason for that was relationships. So I knew that coming as a first-time hotel owner and, working in the industry, I had worked for investment firms before, I had worked in operations before, but that, of course, is different than owning the hotel yourself. So I knew that I needed strong support in order to do that, and I found that with Hilton as partners. Choice is also a great partner. As John just mentioned before, they will handhold you through the process, and that is necessary. It's a lot of steps along the way to becoming a hotel owner. So it's not hard brain-wise, but it's a lot of little tasks and steps and things that can go wrong at every single point. So in my first deal, the seller actually did not think that I could close on the asset. So it was a lot of people that I needed in my corner to prove to them that I'm able to do it. And Hilton was one of those people that wrote a letter to the seller to say that we know Kendra, we've seen her work before, we believe that she can get this done. And I had to submit that letter after my LOI. So they liked the LOI, but they were just like, we don't know who she is. And they haven't seen hotel owners like me often. There are not a lot of women in the hotel ownership space. So that seller was just like, I don't think that she's capable of getting this done. And Hilton said, no, she actually is. So it's things like that and why choosing the brand, but also all of my hotels have been acquisitions. So I didn't necessarily choose the brand, I chose the hotel, and the hotel has that brand. But I look for those types of assets, one, again, because of relationships, but then also just because of their performance. With that hotel, they had a great opportunity, but they were already doing decent. So they were already cash flowing. Their RevPAR index was already a 110. We were able to take it to a 160. But it was already there, and that was because of the brand alone. They just needed a little more elbow grease to get it to where it needed to be.
Great. Any other questions? No? So either John, what outside of liquidity, what do you guys look for in potential franchisees? What traits, what characteristics, backgrounds, experience, what is it that checks all the boxes for you, say that would be a great franchisee for our respective brand? Outside of they can write the check to do the deal. Anything outside of that you look for in terms of cultural fit or you name it?
Look, for me, it's pretty simple. I grew up in the restaurant business. My dad owned a couple of restaurants. I started as a dishwasher in those restaurants. Work in a hotel. I don't care if you're working at the front desk, working in housekeeping, working in the kitchen in a hotel. Once you have a feel for it and understand how all the parts in a hotel intertwine, you're my kind of person. I don't care if you did it for 2 months, but I also want to see the work ethic, the culture, the desire for more knowledge, wanting to learn, wanting to get into this business. Look, this business, Kendra said it, John said it, you've said it. This is a very difficult business. You can make a lot of money in this business. You can lose a lot of money. Rely on your partners, whether they're brand partners, equity partners, consultants. Take all that knowledge in, bundle it all together. If you have those traits, you're going to be very successful in this business. That's what I'm looking for.
And if I can just add on that as well, make sure you do your due diligence for anything that you do. So there was a gentleman that was a mentor of mine, unfortunately passed away a couple of years ago. But there's the 3 most successful people in business in the NBA. Who's number 1? Somebody shout it out. Michael Jordan.
Yep.
Number 1. Who's number 2? Magic Johnson. Who's number 3? Huh? Nope. It's a gentleman, and please look him up. His name is Junior Bridgman. Never heard of him. Okay, he played for the Milwaukee Bucks. He was a starter. He was there, and he was great. So while he was actually playing in the NBA, he knew what he wanted to do. He ended up, while he was playing in the NBA, owning a Wendy's restaurant, owning a Church's. During his time off, he worked at the drive-through window.
There you go.
So people would walk up, and he's there, and he's serving because he wanted to know what the operation was and how it worked. Make sure just because you stay at a hotel, it's not going to give you the experience to know that you have the opportunity to own that hotel and know how that hotel runs. Okay? Do your work and to make sure. And just to end that story, Junior Bridgman ended up being owned 136 Wendy's, 30 Fridays, Coca-Cola bottling company worth $1.46 billion. And he just started from 1 Wendy's. So when you're looking at that hotel, don't just stay there. Ask how it works. Call an owner up. I know us as franchisors, you ask us how the hotel operates and how it works, but call the franchisees. Every one of the franchisees is in your FDD. And if you know what an FDD is your full disclosure document. You can call any hotel, walk in. Hey, I know you're at this place called at Cambria for Choice. How does it operate? How does it work? 9 times out of 10, that owner is going to give you an opportunity to come and look at the systems and do that from a franchise standpoint. But just make sure you do your due diligence. Those people who put in the work prior to getting in touch with us is things that we look for. Like, as John mentioned, the work ethic. That work ethic and the want and the know-how is great. If you're passive and saying, oh, I might want to own a hotel. No, you have to start. You have to have what I like to call the grind. And I need to see that intention and that tenacity of you working towards that goal.
Yeah, no, and I agree, just from Wyndham's perspective, I agree with everything they're saying. You want to be able to understand how the business works, how it operates. But the majority of you, if you're successful in other industries, making the transition into the hotel industry, you're going to hire a professional, or you should hire a professional management company to operate your hotel. But what they're talking about gives you the information and the tools to be able to hold the management company accountable, right? So with that said, Kendra, can you speak to how you go about assessing third-party management companies? Is that your model? Do you have third-party management companies operate it? Do you manage it yourself? Do you have the brands manage it? What does your management structure look like for your business?
Yeah, so for us, when I first started my hotels, we did have third-party management companies. I just launched Elise Hospitality Management last year. So now we are managing all of my properties myself. So how I was able to do that, though, is that I started in hotel operations. So to John's point, it is very important that you know this business. So my undergraduate degree was in hotel management. And I worked in hotel operations prior to moving over to the investment side. So one thing that you do want to be evaluating, again, is your management company. And you should bid out with different management groups. You shouldn't just you should do a full RFP process. So every time that I was purchasing a hotel, I would send the deal to maybe 3 or 4 different management groups, and then they would send me back like their own performas. You should have your own performa first, but then you can compare that performa to what the management company is saying and try to figure out, is this in line? That management company should do a whole meeting with you and just go over what their values are, their values and their team culture aligned with how you want your hotels to work. They will go over just what their history and their track record is, and it is very important that you know and fully understand their track record. And then from there, you can whittle down which would be the right management company and fit for your hotel specifically. Even from your smaller investment groups all the way up to your larger REITs, they use different management companies for different things. So it's the same process that you want to do for every acquisition. For those of you who might not have hotel operations experience, like how we said, you want to be able to hold your management company accountable. So you should probably also get an asset manager. So the difference between an asset manager and a management company is that the management company's role is to protect the property, to work the property as efficiently as it should, comply with brand standards, and manage the employees. But they're not always necessarily operating from the ownership lens because they don't own the property. So they're not always going to consider debt service, for example, in their margins. Versus an asset manager should have your viewpoint as an owner and values in place, and they should be able to just balance and check what the management company is doing so that they're all working together as a team to make it the best investment possible for you. So if you do not already know how hotels work, if you are not confident and savvy enough in how do you read a hotel profit and loss statement, how do you understand a STAR report, those are 2 key reports that are going to tell you the health of your hotel. If you don't understand the health of your hotel, you need to bring someone on your team who does know that.
Thank you, panelists. Look, we are at time, unfortunately. So just the last thing that I would advise or encourage is, like, look, just build partnerships, right? When you come to conferences like this, meet as many people as you can. Meet the brand representatives. There are attorneys here. There are lenders here. There are feasibility study consultants here. Build those relationships. Make those connections, because that's the start. That's the beginning of your journey, is establishing and building the right partnerships that are going to help you accomplish your long-term goals. So please join me in thanking the panelists for their time. Thank you.
Picture time.